Are you wondering why most, if not all of your stock are moving down, while the S&P 500 is making all-time high? In this video, we will analyze the S&P 500, the market sentiment, the market internals, and the two stocks I call the dynamic duel to see what they are telling us about the S&P 500 new high. Stay tuned. Welcome to another S&P 500 analysis. This is the weekly edition. Today is November 20th, 2021. Let's start with a recap from the weekly S&P 500 price chart. Here we see the S&P 500 did not make a new weekly high, but it did close with a new closing high during the week, and we'll take a more detailed look on the price action later. The range for the week was 44.97 points, and it gained 15.11 points, or just a little bit over 0.3% for the week. It did break above the last week inside candle, and it is continuing this one-time framing up. In other words, it's making a higher low. The S&P 500 closed above this 10-week moving average and also this 40-week moving average, so the weekly trend remained to be up. Now let's take a look at the daily chart of the S&P 500 along with the sentiment. The S&P 500 closed at a new closing high on 11/18 at 4704.54. The S&P 500 lost 6.58 points, or 0.1% on Friday, and the VIX came up to near the 18 level, and the put-call ratio also moved up to near the 0.6 level. So this means the market participants are being a bit cautious. And looking at the up-down volume ratio, we see the down volume was greater than the up volume the last 4 trading sessions, and the declining issue outnumbered the advancing issue in the last 4 sessions as well. And the number of new 52-week low has been creeping up, and on Friday there was actually more new low than new high, by a margin of 21 more new 52-week low than 52-week high. And the NYSE cumulative AD lines show how the market lacked the broad market participation, as the S&P 500 is making new high and sitting near its high. So what is pushing the S&P 500? Before I show you what I believe is holding up the S&P 500, let's take a look at the NASDAQ market. And looking at the NASDAQ 100, we see the NASDAQ 100 gained 373 points, or 2.31% last week, made an all-time high and closed with a new closing high on Friday at 16,573.34. From these numbers, one would conclude the NASDAQ market is strong. But if we drill down to the internal, we see a different picture. There was a negative divergence from the up-down volume ratio on Thursday, but more notable is the negative divergence from the daily advanced decline. The declining issue outnumbered the advancing issue in every trading session last week. And the daily 52-week high versus the daily 52-week low also show a negative divergence with the NASDAQ 100. As the NASDAQ make new high, the number of stock making new 52-week low outnumbered the number of stock making new 52-week high. And here's the NASDAQ cumulative AD line. This is flashing a huge warning sign. This is like pushing a car uphill with less and less people pushing. Major negative divergence. Now we have seen some troubling signs from the internals. Let's go take a look at the price action of the indexes before I give you my summary on what the market is telling us. Looking at this daily chart of the S&P 500, we see the price is hovering between this 141 and 127 extension. We also see this week it did not make a new all-time high, but it did close with a new closing high on Thursday. So the upside scenario for the coming week is to watch for a move up to this 4750 level, right near the 141 extension and the upper channel trend line. And for the downside, we'd be looking for a pullback somewhere around this 4600 level. And if that doesn't hold, then we're essentially looking for it to come down and possibly test this level here at 4545. Now switching over to the S&P 500 ETF, the SPY, we saw it move above this 470 level and then it pulled back to this 469.5 to 466.5 zone. So this is one of the high volume area here. And so for the next week, the upside scenario is for this to possibly move up to the 475 area. And for the downside, we'd be watching for it to move back down to this 4650 area here, 466.50. And if it failed to hold this level, then we're basically looking for a pullback down to this 461.50 area. And for the NASDAQ 100, we see that it had broken out from this price channel here and put in a new closing high and also a new all-time high. And it is moving toward this 141 extension at 16,833. So that will be our upside scenario for next week to see would it be able to come up to this level. And for the downside, we're essentially looking for this to pull back into the price channel and possibly work toward this this pivot high here at 15,701. And looking at this ETF, the QQQ, on the upside scenario for next week, I'm basically just going to leave it at all-time high. So just follow the NASDAQ 100 cash index price action for proper level to keep an eye on. But for the downside, essentially looking for this gap to get filled somewhere around 402, and then basically looking for it to work down toward this 400 level. And the Russell 2000 dipped back underneath this March all-time high after making a new all-time high on November the 8th. So for the coming week, it's important to see the Russell 2000 to come back above this 2360. And if it is unable to stay above this 2360 and dip below this 2317, essentially coming back inside of this balance area, then we were essentially looking for a possible retracement all the way down to the bottom of this balance area back toward this 2135 level. Looking at the IWM, the ETF for the Russell 2000, for the coming week, it's important to see would it be able to work back up above the 234 and hold above that, then we could monitor for a possible move back up to this 240.88 level. Now, if it is unable to get back above this 234, then keep an eye on 232 and 229.67. So those are the downside level that we will keep an eye on for the coming week. And the other one is this 228 level here. If it dipped back inside of this composite value area, then look for a possibility for it to make its move back down to retrace down to this 216 area, which is the composite value area low. The Dow Jones Transportation is trying to hold above this 16,170. If it is unable to hold above this level, then watch for a pullback below back down to this 15,500 level. And if it holds above this 16,170, then watch for a move toward this closing high at 17,039. For the Dow Jones Industrial, we see the Dow Jones Industrial pull back to this 35,625 after tagging this 1x extension at 36,438. So for the coming week, we want to see would it be able to come back up and tag this 1x extension 36,438 and possibly put in a new high. But if it's unable to do that and come back down to this 35,150, then keep an eye on it, come back into this balance area. If it come back inside of this balance area, then we could see a possible retracement back to the bottom of this balance area near this 33,800. And looking at this New York Stock Exchange Composite Index, this is a broad market index. As you can see on November the 16th, on Tuesday, it came up and put in a new all-time high, but it did not close with a new closing high, which was made on November the 8th. And right now it's pulling back close to this 16,935 level. So for the coming week, if it is unable to hold above this 16,935 level, look for a possible pullback to this 16,708. And if it dipped below this, then we could see, similar to the Dow Jones Industrial, a possible retracement move to the bottom of this balance area. And that would be somewhere around 16,090. Now let's take a look at the 10-year yield, the dollar, oil, silver, and the gold market. The chart of the 10-year yield, we see that it is still hovering near this 1.529 area, and we're still monitoring for it to move up to this 1.765. And as you can see, as the yield went up, so has the dollar. So the US dollar is still inside of this zone here. So we're still monitoring for the dollar to come up to possibly to this 97.79 area. Now, if it dipped back below this 95.70, essentially dropping back out of this zone here, then we're looking for the possible pullback to this 94 area. And as the dollar strengthens, we see the crude oil prices pull back. So be keeping an eye on somewhere around this 74 area to see would it be able to hold support. If it doesn't, then we're essentially looking for a pullback to somewhere around $70 level. And for silver, we saw this thing broke out of this inverted head and shoulder pattern. And right now it's pulling back to this neckline. So it's important to see would it be able to come back up and get back above the 25 level and then move toward this first target level of 2667. But if it's unable to get back above this 25, then look for a possible of a fake breakout from this inverted head and shoulder pattern and look for a pullback toward this 2272. Similarly, for the gold, we see that it also broken out of this inverted head and shoulder and seems to be chopping around this zone here up above the 1846. So it's important to see would it be able to make us move toward this first initial target of 1923. Then the 100% major move will be 1995. Now, if it is unable to hold this level and then come back in and dip below this neckline, then look for a possible retest of this 1804. Now, before we take a look at the dynamic duo, the two stock that I call it dynamic duo, let's take a look at the top 10 holding in the S&P 500. As you can see, Apple is the top with 5.9%. And you got Microsoft, Amazon, Facebook, Google, the alphabet, and then Berkshire Hathaway, and here's Tesla, and then Nvidia, and then JP Morgan finished at the 10th spot. So the dynamic duo that I be focusing on will be Apple and Tesla. So let's take a look at Apple first and see what it did for the last week or so. So looking at Apple, we saw last week, it was on a pretty much a straight up move to a new all-time high. And it gained 7% or over $10 last week. And it's a huge move for the S&P 500 and the NASDAQ 100 because of its weighting factor. And if it continues to move up, the next target that we'll be watching will be this 166 level at the 127 extension based on this particular swing here on the Fibonacci retracement. And for the downside, we essentially are looking for a move back to this level here at 152.25. And for Tesla, ever since Elon saying that he was going to sell off 10% of his holding, the stock had bounced back 12% or $122 for the last week. And if Tesla continue to move up, there's some potential target that we want to keep an eye on. And these are the targets. So we want to keep an eye on this 1158, 1193, and the all-time high 1244 level. And for the downside, we'll be coming back down below this 1000 level and possibly dip down to fill this gap in the 944 and 910 area. So these are the two stocks that I believe were used to help hold the S&P 500 and the NASDAQ 100 up in the new high territory last week. Of course, there are other FANG stocks participated as well, but I believe Apple and Tesla are the key players. Now, finally, let's take a look at the E-mini S&P 500 Future and see what it is telling us about the possibility of the price move for the S&P 500. As you can see on this market profile here, I have marked off the Globex all-time high at 4723.50 that was printed on 11/18. Now, in the past, the Globex all-time high had always been tagged in some future regular trading session to make it legitimate by tagging that all-time high. So unless this time is different, the expectation is for the ES, the E-mini S&P 500, to come up and take out this 4723.50 sometime in the near future. Okay, and when it does, the S&P 500 cash index will also come up and put in a new all-time high. So in summary, we saw a lot of negative divergence from the market internal, and they usually alert us to be prepared for a pullback to get rid of those divergences. We saw throughout last week, most of the gain from the S&P 500 and the NASDAQ 100 are due to a few large cap tech stocks, in particular Apple and Tesla. Now, although there is this Globex all-time high telling us to monitor for another S&P 500 all-time high, we still need to be prepared for the potential pullback or sell-off. So if we take a closer look at this market profile, you can see that there are a lot of single prints and poor low waiting to get resolved. And if the ES come down and resolve these things, it could pull the ES all the way down to possibly to this 4600 level here, okay? Because we got a lot of these single print poor lows left behind that need to get resolved. Now, there's nothing preventing the ES to tag the Globex all-time high, then follow a pullback to the 4600 level. So the takeaway is to watch for the all-time high for the upside and the 4600 on the downside. No one knows for sure which direction the market will take. All we can do is to be prepared for whichever direction it decides to take. So good luck. And my channel just exceeded 7,000 subscribers last week, and I'd like to thank all of you that have subscribed to help support this channel. And for those that are new or have not subscribed, click on the subscribe button to subscribe to show your support. And for everyone, be sure to smash that thumbs up to let me know you liked the video and to help me promote and share this video. Thank you for watching and stay safe.